Middle East political turmoil, the threat of a U.S. attack, and now the U.S. government shutdown in America have caused volatility in the oil markets recently. Joining us here in our studio to talk about that is Tom Kloza. He's Chief Oil Analyst at GasBuddy, an oil price information service. Thank you so much for joining us, Tom.
Nice to be here.
Let's get right to it. I mean, what kind of an effect is today's shutdown having on an already sort of up and down oil market, given what's happened over the last year?
Today's shutdown is actually a little bit bearish because if you think about the U.S., if this is a sort of dress rehearsal for the debt ceiling showdown, then you can really have some staggering consequences for demand and supply. Even with the Syrian war and even with everything that's happened in the Mideast, is starting to turn very, very common right now. And we had a very tight summer in terms of supply, but usually the autumn is when a lot of refineries go on maintenance and we have a lot of crude. So it's kind of bearish overall, and I'm surprised to a certain extent that crude oil prices buckled but didn't break down today.
Today down to about, I guess, a 102, 101 per barrel?
Yeah, about 100 to 102 in the U.S. and maybe a 108 or 109 overseas in general.
Okay, so we assume that this drama in Washington eventually goes away, but we still have issues in Syria, as you mentioned, and an ongoing subliminal, if not overt, threat to Iran that's sitting on the world's fourth largest supply of oil. But it seems like now that the world has stepped back from this precipice, and it actually seems like there could be some hope for negotiation between Iran and the West. And Syria, through its admission of chemical weapons, things have stabilized somewhat there. So what could the possibility of stability in both of these two countries bring to the oil markets?
It could bring some stability. I mean, certainly Iran has not been producing nearly as much as the world could take or would like to take for some time. And this rapprochement, if it works over 5-6 months or so, could really have an interesting consequence. The other thing we have to look at is Iraq. Iraq has tremendous problems with above ground stability, but below ground it's very easy to find oil. We've got some fields that are coming on stream now that are 500,000 barrels a day. We have to drill maybe 500 to 1,000 wells to come up with that much. So supply is starting to turn, and I think it's going to turn. It's going to be temperate or modest for most of the world and the country.
Well, winter's approaching, so are there any trends or predictions that you have for us in terms of what these conditions added to the winter will do to home heating prices? Yeah,
I think heating oil is the product, along with diesel fuel, which is very, very dynamic globally. And those are the prices that could go higher. If you live in one of the Indian Ocean countries, if you're in that part of the world, you're actually paying more for diesel, heating oil, and jet fuel than you ever have because of the weakness in the dollar. In the U.S., I think people are looking at paying more than $4 a gallon. And diesel is really the product that moves the world, and that's the one that's the high growth molecule in the world. It's not gasoline. In the United States, we go nuts about gasoline, but the rest of the world, the crazy molecule is diesel.
Now, we talked a little bit about, in this show, about how the auto industry has been making a bit of a comeback. Does the auto industry's success translate in any way to the oil market, since that's where we're using the fuel?
The auto industry's turnover rate is translating into much lower demand trends, particularly in the United States. Notwithstanding today, where we had some lukewarm figures for auto sales, there's been a robust turnover of the fleet. And new vehicles, whether it's the big, huge SUV or the small ones, are averaging over 25 miles per gallon. That's happening in the U.S. and it's happening abroad. So we're going to be more efficient. We're coming up with more sort of carbon fibers and light aluminum for the vehicles. It'll probably cost more to get your cars fixed because you'll have to go to specialty shops, but they're going to get better mileage. And that's going to be true pretty much on every continent.
A short answer, do the markets, are they betting long for this shutdown or short?
I think they're betting that this is going to be a quick shutdown. But the world itself and the financial funds are very long oil. They've got a very big bet, probably about $37 billion, that oil prices are going to be prejudiced to the high side, and they could be wrong.
Okay, thank you so much, Tom Kloza. As always, it's a pleasure to have you here.
Thank you.
Now, will the U.S. government reopen for business tomorrow? The markets seem relatively unmoved by the stalemate today, but should it drag on, some market analysts say that it could hit the U.S. economy pretty hard. 30 to 300 million homes, I think $300 million a day in lost revenue, excuse me. Tomorrow, Andrew Schmertz returns to Arise Exchange. I'm Gary Anthony Ramsey. Thank you so much. You're watching Arise News.